right, we're joined now by Howard Davidowitz, a retail industry veteran and chairman of Davidowitz and Associates, to get his reaction and outlook. So, Howard, you've been pretty bearish in some of our previous conversations on the retail sector of this economy. So, why do you think it came out better than expected today?
Let's look at, first of all, January. January is worth 6% of the retail year. It's meaningless. December, the big month, was down. Now, it depends how you look at these numbers. February is going to be a debacle. I'm sorry, December down, January, which is 6% of the retail year, 15% of the last quarter only. It does no business. It's all promotional. Sorry, it doesn't look good to me. Kroger lost $900 million. Walgreens is down. These are the giants. Super value comp store sales are down. They do $70 billion. I'm sorry. Target is going no. When I look at the numbers for the big guy, I'm not talking about some dinky little apparel chain doing $2 billion, which is idiotic. When you look at the real numbers, we're going nowhere. And the consumer, who has lost $1 trillion in credit availability, who has massive job losses, consumer bankruptcies are at a record level, savings is way up because they're petrified of everything Obama's doing, and so am I. So when you look at what's going on around here, how can it be good?
Yet you're still telling me you're buying your wife Hermes bags, so people are buying stuff out there, Howard.
Absolutely. There are people buying. That's what Hermes is doing very well.
So the high end, there's still that market.
The high end will shrink, the size of it. Of course, there's going to be less high end. But is Goldman Sachs still going to be here? Is Morgan Stanley going to be here? Is J.P. Morgan? Of course. And all the lawyers supporting them and everything else? Of course. But the high end is going to be a smaller penetration. What's going to grow is discounting.
GDP, I'll throw these eco stats at you. Unexpected rebound in the fourth quarter. You're not buying that as a driver?
I believe that GDP, of course, is up. It's totally understandable. Inventory way, way down. Industrial production driving GDP. Of course, we're going to get some of that. And that's why you see some of the employment figures improving. They're hiring more part-timers. All of that makes sense to me. What doesn't make sense to me is an improvement in the American consumer. I don't see it.
People are buying cars and gas.
People are buying cars and gas. Let's look at that.
We're at that level of the cycle or point in the cycle.
We're at that point in the cycle, and let's just look at that. We got 3 auto companies. General Motors, we can't even talk about. I mean, it's a cadaver. Chrysler is a cadaver. Toyota has collapsed. Now, if you want to tell me that Ford is doing a little better without help from President Obama, yes, I buy that. But most of the auto world is crippled. Crippled. And the unions didn't give up enough. Obama handed them all the equity for nothing. So that's not doing too well. Most of American auto industry is not viable. I'm not buying into that story either.
You know, you've got the consumer confidence figures too, right? So people are starting to feel a little bit better about things, and that whole psychological outlook is so important, right? About how, you told me January doesn't matter, but doesn't it build on, the fact that we got this improvement? Doesn't that carry over? And you said, to quote first part of our discussion, February is going to be a debacle. So then quantify that. So how much of a decline will we see if we've got advanced retail sales January coming in 0.5% of 1% gain?
We're going to lose 1% in February. Okay. February is going to be terrible.
So it'll be back into negative.
Back into negative. And February also is not that important, to be fair.
Okay.
Those months just don't mean anything on the retail. They don't do business in those months.
What about the staples stuff? Okay, so break it down industry by industry. If you're from an investment, I know you guys don't do stocks, but from an investor's perspective.
There's a lot of stuff winning. I've been on a show 1,000 times. I've talked about TJ Maxx and Ross. They're still hitting it out of the park. Hitting it out of the park.
What would you say is the bellwether, like a Walmart?
A Walmart, I think, is an important bellwether. Look for discounting to continue to grow dramatically as a penetration. Look at off the mall to grow versus on the mall. On the mall is all discretionary. Off the mall, you got Walmart, you got Target, you got Costco. Costco's going to do very fine. A lot of stuff is working. Aaron's Rent-A-Center. Fine, because you can get credit. The consumer is down trillions in credit.
We didn't even talk about the credit issue. Unfortunately, we're running out of time.